Hello, everyone, and welcome back to today's episode of Real Take Real Estate, where we give you the real take on today's housing market and everything real estate. I'm your host, Maddie Maloney, and I'm joined today alongside my co-hosts,
Joe Sambear
and Sam Feda.
Today, we are going to be talking about everything that happens once you're under contract. So at this point, you should have already been pre-approved, most likely with a scenario, so you know exactly what you're getting into. And this is everything to expect, once you get that verbally accepted offer. So we're going to go over what that process looks like, what involves locking in the rate, and then what's next and what your action steps are from that point. So I'm going to hand it off over to Joe to really just talk about what is a verbally accepted offer and what it looks like for both the realtor and the buyer at this point.
Yeah, Maddie, this is a great topic. It appears that this is where a lot of our buyers, and especially first-time buyers, get tripped up a little bit about what's coming next. Mm-hmm. And the key is communication and letting us know where we are in the process. So we've sent the pre-approval letter. We've given you some information about the scenarios. That should be resolved at this point. Mm-hmm. You've made your offer, a written offer, and your buyer's agent has presented that to the seller. At that time, usually there will be some kind of verbal exchange, and in real estate, written purchase agreements is the only thing that matters. So verbal acceptance really doesn't matter. We need written acceptance, but we do want to know if the sellers have verbally accepted, because then we can start watching the time as far as the time on the contract, locking the rate. We're going to get into all those details, but when you've heard from the seller that they're likely to accept your offer, we want to start hearing that information so we can start our preparations on our side. And then what will happen is they will accept it in writing or reject it in writing or counter your offer in writing. So they refer to that as, when it's all written and signed through, they call that bottom line. That means the purchase agreement has been bottom lined. But sometimes there's a lot of back and forth that can go on for days in negotiations. So we don't want to wait until the end to get that written offer 4 or 5 days after everything is completed. We want to be right at the front end of that process.
Yeah, because a lot can change, right, during the, just those 4 or 5 days where you might have that verbally accepted offer, and the market could change a lot in those 4 or 5 days. So if we know ahead of time, we can look at getting you, locked in from there.
So this communication can come from both the realtor and the borrower. If it's both, that's even better. But the key point is that the sooner that we know, the easier it's going to be to get through closing. The more preparation that we have, the smoother the process is going to be. Because sometimes maybe the realtor doesn't know that we're going to be setting up a distribution or some other things that may take a little bit more time up beforehand. And really just the sooner that we know that you have an accepted offer really just makes the whole thing go so much smoother. So definitely a good key point there. All right, so we get the accepted offer at that point. Whether it's verbally or the bottom line. So then, Sam, once they send that over to us, or we know that it has been accepted, what do we look at from that point?
Yeah, that's a great question. So what goes on from there is, you guys mentioned, that we have the scenarios and kind of the strategy built out with the customer of, what's my payment going to look like? We might have priced out a few different options. Here's where you'd be at 5% down and 10% down. So there's still a little back and forth that might go on at that point, really getting them, locked in, saying, here's where you'd be at 5%, here's where you'd be at 10%. If there's any difference in the loan program, just getting those dialed in. So at that point, they're already aware of what their options might be. Mm-hmm. And then, choosing which way they want to go with that. And then from there, we can start to watch the interest rates, watch the market. If there's a big report coming up, or if there's a Fed report coming up on interest rates, or the CPI report for inflation data, if there's something like that coming up to where we anticipate the market getting better, we might advise the customer to say, hey, let's wait until Wednesday or Thursday to see how this data comes out. and then we'll potentially lock the rate in at that time. Most times I'll kind of say in the beginning that, is there the any benefit to locking in right away, or should we wait a little bit? And then I'll say, here's what your rate would be today if I see the market going south. We'll secure that in, and how does that sound to you? And try to get them a little bit better if we can. And then there's also the buying points option. That question comes up a lot, to where, how do I get a better interest rate? People have talked about buying points. Does this make sense? So that's something we'll talk about too at that point, to where really there's a scale. So there's each interest rate has a different number tied to it, to where the higher the interest rate, the more of a lender credit you could get to cut down on some of your closing costs. And then the lower the rate, we might be able to charge you X amount of dollars to get you a lower rate. And that really is dialed in with the break-even point. So there's, how much monthly savings is there compared to how much upfront cost is it to get that lower interest rate.
And I know that's something that we had talked about before too, when people are looking at other lenders or something and they get, say a certain rate, and they're like, oh my gosh, I have this great low rate. But then, sometimes we're able to take a look at those loan estimates and see, okay, yeah, so you are getting a great rate, but you're also paying $5,000 in points for this. So it's really great to get with a trusted advisor so that we can walk you through and be like, all right, so here's the breakdown of this. We can get you this rate, but it is going to cost this much. And, we'll let you know, with the way the market is right now, it may not be beneficial, because we're probably going to look at refinancing this, and the break-even point just doesn't make sense at that point.
And we want to make it a financial decision, not an emotional decision. And a lot of times it's an emotional decision, like, oh, I'm at whatever interest rate.
Yeah.
But we really should do the calculation to see financially, this is the break even. It's going to take you 2.5 years to recuperate that discount point you paid. Is it likely you're going to be in this home 2.5 years?
Exactly.
If you're going to be there for the next 30 years, clearly this is the right decision. What we find a lot is people move quickly. They either sell the house, upgrade, or they refinance. So it's very unlikely most people stay in their house or in that mortgage 30 years.
For 30 years.
Highly unlikely. And Sam, when you said something about we watch the rates, I think this might be a good time to talk about what that means on the backside. Like, I don't think people are aware what we are doing to watch the interest rates. So what that means from my perspective is we pay a fairly significant financial amount to have professional experts watch the rates for us. So the mortgage rates are tied into the bond market. That's what's really setting interest rates. And that is live trading going on throughout the day. So we're getting reports back, morning updates, and text alerts of what's going on in the market. And so this kind of brings us back to this whole topic of why we want that information. Is we might find, oh, you have a verbally accepted offer, you have your written offer, rates are changing in 20 minutes. Sometimes it's just enough time for us to get that information, get the lock in before actually rates get updated. So that's what, when we say watching the rates, it means we're watching the bond market and listening to our professional advisors. And we'll share that information with you.
And this is just something that, you do not have to be an expert on. When you're buying a first home or something, or as a first-time home buyer, people are talking about the rates. You may want to try to look at that. That is what we are here for. And you should have trust in your mortgage advisors, in your real estate agents, that, we have your best interest in mind, and we're the ones that are going to be following this and advising you along the way. So you don't have to be an expert in this. That's our job and what we are paid to do. So definitely some good points there. All right, so that's everything to go in with locking the rate, different points being paid, and some of the options there. So say now we've gotten the bottom line offer, everything's been signed and executed. We've been able to lock in the rate then at that point. What is next from the borrower's perspective? What are their action steps at this point in the process? And Joe, I'm going to hand it off to you.
Yeah, so the next step for the borrower is to really get that home inspection scheduled. So if you've written into your contract that you're going to get a home inspection, which we highly, highly recommend, The inspectors get really busy, so it's very likely you're going to talk to your realtor partner. They may give you a list of preferred home inspectors. You're going to want to get that scheduled ASAP because it'll take them, their schedule can be tight, and we need to get them to that property, because the next step on the lending side is getting the appraisal scheduled. And we typically like to get the appraisal scheduled after the home inspection. So that's why it's critical to get these in line.
Yeah, and then isn't there a inspection period right in that contract that you've signed? So
Most
there's a
contracts.
certain window of time where you have to complete that inspection. So that's definitely the first step at that point.
It's going to be laid right out how many days, or it's going to be negotiated into your contract. So that's critical to watch that window, because that might be the only window you have to
Clear the inspections.
clear the inspections. So next, we will have you start looking for homeowners insurance. So we know the property address. We know the closing date, because the closing date is in your contract. So really, you now can start talking to your homeowner's agent. Most people would start with the agent they're working with their auto, because as you bundle insurance, you get a multi-policy discount. So it's very likely you're going to contact your existing insurance agent, maybe do a little shopping, and tell them, I'm buying this address. This is the date we're closing. I need a final quote, not a rough idea. We want a real quote that you provide to us. I would say homeowners insurance is our biggest obstacle to closing on time. It's delayed many closings. It can be challenging to get. Maybe your agent's out of town or something's happening. So you definitely do not want to wait to the last minute for that.
Yeah.
Then we will send you a list of items as we get started. We're going to refresh some of the documents. So we may have collected a pay stub 2 months ago. Now we're going to get your updated pay stub. We'll give you a whole list of items just to refresh the documents, and away we go.
Yep. And Sam, have anything to add on to that, of anything that borrowers should expect in that initial period?
Yeah, I mean, really, like Joe said in the beginning, is just that whole communication piece. When you know you have that verbal accepted offer, when you know you're going to be moving forward, definitely get in touch with us. And we'll do our best to, obviously, if we know that you're making that offer, because odds are you came to us to get an updated pre-approval letter and get some numbers on that specific property. Just staying in touch with us, letting us know as soon as it's accepted and as soon as you're ready to move forward, because then we can watch that market. We can do what makes the most sense for you to put you in the best financial position.
Exactly. Definitely some good points today. So everyone, that is going to wrap up our episode today on everything that happens when you go under contract, what that looks like, what locking in the rate looks like with the different options, buying points, and what are the action steps for our borrowers at that point. So we hope that helped. And feel free to message us on social media, give us a review if you guys like what you're hearing, or send us some topic ideas that you'd love to hear in this podcast, but we would love to hear from you. And that is today's episode on Real Take Real Estate.